I think about next week when we get the Federal Reserve giving us their thoughts on earnings. Shana Sissel joins us. She's president and CEO of Banrion Capital Management, joining us from Chicago via Zoom. Shana, thanks so much for joining us here. We've had a whole slew of economic data really over the past couple of weeks. You put it all together, and it seems like the market is getting ready for the Fed to begin cutting rates. How are you guys positioning kind of your portfolio, and what are you telling your clients?
Well, as much as I love to be a contrarian, I am in complete alignment with market sentiment and that the Fed will cut at this meeting. Chairman Powell has been very transparent, and in his remarks at Jackson Hole, he was very clear that it was time to make a pivot from their previous roadmap to make changes, and cuts were part of that change. So I agree with the market. I think where the debate comes in is how big that rate cut will be. Mm-hmm. And as you noted earlier, the market probability for a 50 basis point cut is actually rising. And I'm not sure I understand what is driving this belief that the Fed will cut 50 basis points. They've been super cautious. And I just can't imagine cutting 50 basis points without seeing something in the economic growth activity or in the U.S. economy that warrants that kind of what I think would be kind of a knee-jerk reaction. So we're telling clients, to prepare for a loosening cycle. The Fed is obviously loosening policy, and we want to take advantage of that, which in an economy which is fairly stable means that it's a risk-on environment.
So let's go back to what happened in Nvidia in the last 5 days, right? I mentioned this yesterday. Charlie McGilligott over at Nomura said that Nvidia was basically the central banker of power. That, we can look at the Fed, but it was Nvidia and the FOMO that kind of gripped the market that has really propelled the S&P higher this week. What matters more for you and your asset allocation? Is it what's happening with Nvidia stock or what Jay Powell says on Wednesday?
What Jay Powell says on Wednesday.
Oh, man, I was really hoping you'd say Nvidia. You're killing me.
Sorry, I know. I love Nvidia. I do. But as much as we want to pretend it's a proxy for the economy, and it is to some extent, we should not be basing our portfolio management decisions on the technical trends of a single stock, especially one which is kind of, shrinking in terms of its growth potential. It's an amazing company. It's growing, triple digits, but it's growing at a slower rate than it was a year ago. And that is reflective of what I think the economy is doing. But the Fed's policy is, at the end of the day, what drives the underlying market liquidity and the underlying opportunity for investors in banks or whatever to access capital. So, NVIDIA is great. And control access to capital.
So I guess just looking at the equity markets in general, give us your thoughts on valuation here these days. A lot of folks feel like it's stretched. A lot of folks will say, yeah, but if you pull out some of those big tech names, not so much so. How do you guys look at it?
So I learned at Fidelity, and this is super basic, but I think it's actually a really great tool for people out there who just want to do like quick math in their head. But I learned the rule of 20 during my days at Fidelity. So that is taking the PE of the market and adding in the inflation number and then looking at it on a historical basis. And the general consensus is if it was valuations were above 20, it was stretched. And if it was below 20, it was attractive. And so we're well above 20. Yes, some of that has to do with tech stocks and how much they are kind of weighing on the market. But I think even in the equal weight indexes, we are above that 20 number. And so there's definitely opportunities in the market, but it feels like we're a little frothy here. I don't think we're super expensive by any stretch of the imagination. But I do think that I wouldn't call the market cheap.
Favorite pick right now? She hates all my questions today.
I really like Apple.
Okay, why?
So the stock got beaten up, and then they had their iPhone event last week, which was sort of like anticlimactic. So the stock has been kind of, not doing much for a while. Valuation-wise, it's attractive when you compare it to the rest of the Mag 7. And I think that overall, they're doing the right things to maintain market share. And I think that there's the potential for them to take market share in the future. So, from that standpoint, I think Apple has the ability to grow their global footprint. People like the ecosystem. I'm definitely one of those people. The stock is relatively attractive on a valuation basis, whereas you look at something like an Nvidia or one of the other names in the Mag 7, and they don't look quite as attractive on a valuation basis.
Paul scrolling on his old iPhone, ready to buy the new iPhone very soon,
yes.
As in like in 45 minutes time.
Exactly.
All right, Shana, thanks a lot. Really appreciate it. Shana Sissel, President and CEO of Banrion Capital Management, joining us there. Thank you very much. All right, coming up, we're going to go to